Assalamualaikum warahmatullahi wabarakatuh. My name is Bibi Aisyah Binti Ahmad. My metric number is 2022281458. So today our group will be presenting to you about our topic given by the lecturer, which is financial accounting and reporting of a sole proprietorship or partnership business. I will discuss two parts, which is business background and business characteristic. Okay, I will start with the introduction. Here is the some business background of the company that we have choose. The company name is Butter the Bread. This company is a sole proprietorship type, which means this business is owned by one owner. This business is located at Jalan Jelawat 1, Taman Ikan Emas, 56000, Kuala Lumpur. For the owner capital of the business is RM50,000. For the business activity, this company is doing bakery, which means they sell bread, cake, cookies and other bakery items. Let's move to the business characteristic of this company. Butter the Bread is a sole proprietorship business type, which means owned by one person. So this business is owned by Mr. Khairul Amir. This business is managed and controlled by the owner himself. In terms of legal and lawful, Butter the Bread has SSM certification to run the business. For the source of capital, owner Mr. Khairul Amir using his own money to start up the business. For unlimited liability, owner personally liable for all the debt of the business. But if he gain profit from the business, that means the profit are all for himself.
Next is a classification of business item for Butter the Bread enterprise. In Butter the Bread enterprise, we have a few assets which we can categorize into two categories, which are non-current assets and current assets. So non-current asset is defined as assets that have a useful life of more than a year and are acquired not for resale but for the use in the operation of the business. Whereas the current asset are assets that either cash or something that can be converted into cash within a year. For example, the big oven that we buy, that the owner buy. The non-current asset for Butter the Bread enterprise that we have is the big oven, mixture, fridge, deep freezer and cashier machines. On the other hand, the current asset for Butter the Bread enterprise is the cash in hand that the owner have, which is 10,000 ringgit, and the cash inside the bank, 40,000 ringgit, and also the inventory stock, which is worth of 5,000 ringgit. Moving on to our liabilities. In Butter the Bread enterprise, we have two types of liabilities, which we can categorize as non-current liabilities and current liabilities. The non-current liabilities we can define is as liabilities that owner owe by the business that are not repaid within a year, and whereas the current liabilities is the liabilities that we can pay within a year. Hence, in Butter the Bread enterprise, the non-current liabilities that we have is the shop rental. We have to pay the rent of the shop, 2,000 ringgit every month. Besides, the other non-current liabilities that we have is a motorbike. The owner have purchased a motorbike with the installment of 300 ringgit every month for a 10-year loan of 4 years. And on the other hand, the current liabilities that we have in the Butter the Bread enterprise is our big oven. So this particular big oven is our current liabilities, which with the installment is 600 ringgit every month, and this tenureship of the loan is for 12 months period.
Now, I would like to talk about our capital requirement for our business, Butter the Bread. When we started the business in 2018, we needed an initial capital of 50,000 ringgit Malaysia. This include the cost for setting up the bakery, purchasing equipment and ingredients, and another startup expenses. We able to secure this amount of capital throughout the combination of personal saving and a small business loan. Over the year, we have enabled to streamline our operation and reduce our costs. As a result, our capital requirement for year 2019 to 2022 are only 15,000 ringgit Malaysia. These included expenses of equipment maintenance, ingredient purchases, and another operating costs. For this year, 2023, we anticipate needing a slightly higher amount of capital, which is 20,000 ringgit Malaysia. This is because we are planning to expand our business and introduce new product to our menu. This will require to purchase another additional equipment and ingredient to support our growth. Now, I would like to share about the operating revenue. Our daily sales generate an average of 1,500 ringgit Malaysia. This means that we are able to generate a consistent income that support our business operation and allow us to continue serving our loyal to customer. Now, let's talk about the expenses. Expenses divided by 2. That is, operating and non-operating expenses. For operating expenses are ongoing expenses that a company incur as a part of its day-to-day business operation. These expenses are necessary to keep the business running, and they are separate from expenses related to investment and financing activity. Our operating expenses include maintenance costs for our equipment, purchasing of stock and ingredient, transport expenses for our delivery service, salary for our 2 staff member, and the salary for the owner of the business. Non-operating expenses are not directly related to company's core business necessary operation. These expenses are not part of the day-to-day operation of the company and may not occur regularly. Non-operating expenses are usually one-time or infrequently expenses that not directly generate revenue. On the other hand, our non-operating expenses include asset depreciations and tax expenses. Asset depreciation is decrease in the value of our equipment and another asset over time, while tax expenses are tax we are paid to government based on our business.
Now I will present about the recording process in Butter the Bread business. First of all, recording process or bookkeeping is the process of recording your company financial transaction into an organized account on a daily basis. It can also refer to the different recording technique businesses can use. So the first element in bookkeeping is source document. Source document is an original record that containing details of transaction that enters the accounting system. An example of source document is bills, invoice, receipt, and also bank statement. The second element in bookkeeping is journal. Journal is detail of account that record all financial transaction of a business. There are various type of journals such as sales, purchase, and also general journal. However, in this business, the owner does not keep a proper or formal journal since the business is managed by the owner himself. He will record all the transaction in an Excel manually and also noted it in personal notebook. So the third element in bookkeeping is ledger. Ledger is also known as the T account that consists of debit and credit. Butter the bread business does not record debit and credit as the format, since the owner only recorded it in Excel manually. The fourth element is trial balance. Trial balance is an accounting report that lists the balance of credit and debit totally. Owner does not prepare trial balance but only record it in Excel, which help him to know the business current account status. The fifth element is adjusted entries. Adjusted entries is an adjustment to asset and liability account that reflect the impact of accounting period on underlying transaction. Butter the bread owner rarely do adjustment in his business. This is due to that he will write down all the transaction and expenses in his notebook on what happened in the business. Since if an error happen, so that he will recalculate the value again. The sixth element is adjusted trial balance. Adjusted trial balance does not apply to this business, since the business does not use a proper accounting system from the beginning. And last but not least is financial statement. Financial statement is the result of operation and the financial position of the company. Due to some constraint, owner will just use value calculated in the Excel previously in order to pay all the expenses that has been used in that month. Now, what are the advantages and disadvantages of bookkeeping? So the advantages of bookkeeping are: it helps to maintain the business record. Number 2, it helps to prepare for financial statement. Number 3, it helps to control over the properties and activities of the business. Last but not least, it helps to provide specific information to the related parties, especially to the owner. So the disadvantages of bookkeeping are: manipulation of account can happen. Number 2, management cannot take decision and correct action cannot be possible. And last but not least, accounting information is being made based on estimation. I think that's all from my group. Thank you.
Some